All right, I guess we're here. Good morning. Comment allez-vous? How are you today? I'm doing good. Thank you very much. Welcome to Trade Non-Farm Payrolls live number 166. Yeah, and I'm in the middle of flooding. If you're in the southeast of the United States of America, it's flooding. But that doesn't stop me from being here with you. So I'm super excited today. This is an opportunity for us to hang for 3 hours. Thank you, FX Street, for being such wonderful hosts. 3 hours. And again, this is the 166th month in a row that we did this webinar. Oh, you should have sound. I am broadcasting sound. Yeah, sound is fine. So, hey, good morning, moderator. We're so lucky to have the world's greatest moderator. There should be like an award ceremony once a year, like world's greatest moderator, right? So, yeah. So, anyways, good morning, everybody. So, big week for Trump. Yep, big week for the virus. Now we're on to non-farm payroll. So we'll take a look at the fundamentals of it. We'll see where we're on trend, and we'll kind of explore the idea of what will move the market significantly and what will move it not significantly. So that's great. The news will be released. There will be some sort of volatility. We'll already have support and resistance identified. I also intend on spending, an hour and a half answering your questions on how to improve as a currency trader. That could be technical analysis. That could be fundamental analysis. That could be trader psychology. But we are so lucky to have this community where we can get together and support each other. So namaste. Once again, thank you to FX Street. What else should we do today? We got that news thing? Yep. We'll do some training? Yep. Take requests? Yep. Go through everything? Yep. So today we will most likely go through all yen pairs, all dollar pairs, all Swissy pairs, and we'll look at gold, oil, and Bitcoin. Yeah! Crypto, baby! So, oh, by the way, so rude. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. We're a boutique foreign exchange trading brokerage firm. And I'm here to share my, 20 years of experience trading Forex with the overriding goal of earning your loyalty and respect. And maybe, just maybe, if you're ready to trade real money, you'll choose Traders Way as the prime brokerage for your new, successful Forex trading business. If you're still not ready for real money, visit tradersway.com, open up a demo account. When you're in your back office, takes like 30 seconds to open an account, right? So you'll find yourself in the back office, download MT4, place a couple of trades. You'll see the execution speed's fast. You'll see the spreads are narrow. You'll see the swaps, and we'll go over that today, are amazing. And if you don't like spreads at all, you're like, I don't like spreads, I'd rather have an ECN, then you can have an ECN account. Okay? Wink, wink, nudge. You know what I mean? Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Now, 20 years ago, I would say, welcome to today's webinar. Let me remind you that the purpose of today's webinar is education. This is not an alert service. I am not here to make trade recommendations, but I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this wonderful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky and not appropriate for everyone. However, your past performance does not predict future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Isn't that cool? That's what I've been saying that for 20 years now. All right. Oh, okay. Check this out. I got it. Okay, you're over here. You're over here. So I got to make some changes here to fit everything. Why don't I grab that? And I'll go over here. Is it this thing? We'll try. Hang on. No. Oh, probably this. Yeah, it's this thing. And I got to add this somewhere, but it doesn't know where to add it. I don't know where to add it. All right, so we're not going to have chat. I never understand why it doesn't work on these webinars. Oh, maybe it's this one. Yeah, it's this one, baby. Let's try this one. Yeah, boy. Boom. All right, so we're going to be able to display chat. Okay, got that done. Now, it looks like you want to have more charts. So let me move this over and give you more eye candy. La 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 la. And then you go. All right, we can just do it this way. All right, cool. Everything look good? All right. I'll even bring up the PowerPoint presentation to go over this high volatility event-driven strategy. Although my computer doesn't seem to be able to search anything at the moment. Well, I'll have to do it manually then. Cool. So let us be going now. So the first thing I always do as a currency trader is I have a bias. Okay? I have a bias for the entire world's economy. Global macroeconomics. That is my first thing always. From that bias, then I know directions in which the currency pairs would be moving if they were moving in the same direction as my bias, right? Then I set up trades in that direction. Because my goal in ideal situations is to be selling when I think the market should be falling and is in a downtrend, which means if I'm a seller, I want to sell high. I want to sell lower highs and create lower lows. Okay? Reski wants to know what a currency is. Well, money is a medium of exchange, of store of value, and a unit of account. Oh my God! That was so awesome right there. That's right out of the textbook, bro. Yeah, got to know these things. You guys remember that? Anybody take a economics 101 class? That's what you would have learned first year of college, I suppose, maybe even high school. But that's what it is. Medium of exchange, a unit of account, store of value. All right, so let's not get sidetracked. Let's just take a look around the world. What do you guys think of this chart? Is that too nutso for you? This is Kiwi Swiss franc. If you want, I can switch it over, but we can leave it there. So, I got to get my drawing tool going. And it seems like our downtrend has continued. Great. And that we are selling next week's weekly pivot points, which is good. Where did that drawing tool go? So the interesting thing about currency, if you're talking about like paper money, which is still money. The interesting thing is it started in Sumeria, right? In Sumar. It's the first recorded place in history where people didn't want to carry their money around, their gold and their silver and whatever else form of money they used. And they said, you know, it's pretty dangerous to keep in my house because people can just come in and steal it. It's pretty dangerous for me to just carry it around because people could just kill me and take my gold coin. So I'm going to pay somebody to hold it in vault and protect it. And that banker gave him a piece of paper and said, all right, you have this amount of gold in your vault. So now people found out that when you need to buy a table, you don't have to actually go and get the gold. You can show the guy, well, look, I can give you some of my gold. And they just traded the paper. So that's kind of where currency came from. But money can just be, you know, beads around your neck. It could be anything. Okay. But the interesting thing about banking is one day the bankers looked at each other and they said, you know what? Nobody ever comes in here and asks for the gold. All we do is move gold from this person's shelf, right? From this guy to the table producer's guy, and then the table producer guy moves some gold over to the other shelf where the wood guy goes, and the hammer guy, he has his store, and there's gold. And they found out that they're moving the gold around from this person to this person as they traded the paper around. But then they're like, but the gold never changes. So one day someone comes to them and says, hey man, I want to borrow some gold. Will you lend me some gold? And they're like, dude, we're going to lend this guy gold and nobody's even going to know. So suddenly they start lending people other people's gold. Right? And now there's more gold, there's more paper in the world than there is gold. But the paper is traded like it is gold. And so the fractional reserve part of it is suddenly there's $1 million worth of gold in the vault, but there's $3 million in loans outstanding. Or even, right? Even 100 million. So that's interesting. The economy grows. So anyways, so there's the difference between money and currency if you want to look at it that way. Let me move my camera. Can you guys still see me over there? Yeah, that's all right. By the way, the head of Credit Suisse is stepping down, so if you need a job. All right, so I got my drawing tool. Good. So let's get in there. Let's get in it. Okay. Down, 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 up, up. So you can see I sold on the first down, I sold on the second down. Okay, these are all examples. So the next one is down, 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 up, up. This is another great example of where you should sell. This one I actually did, but this is exactly the same as these, right? Down, 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 up, up, all right? Down, 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 up, up. And the interesting part of all of this, this is called price action. So typically what you do is you take the old support and in the future it becomes resistance. You take old support and in the future it becomes resistance. You take old support and in the future it becomes resistance. So the interesting thing is this will continue down forever. Forever meaning as long as there's a downtrend. So you shouldn't be, you know, expecting up. Tahid wants me to not talk. What do you Anam, what is it that you want me to do? Anyways, this will continue in the trend forever is how I want you to think of it. Okay? I don't want you to fight trends. I'm a trend trader. So if I'm here to teach you my style of trading, you have to understand that I'm a trend trader, and I believe the trends come from global macroeconomics because that will make money cross borders. It'll go into an economy when things are good. It'll come out of that same economy when it's bad. But the money is going to cross borders, changing the supply and the demand of money globally, which influences the price. So I tend to look at trends because the economic factors don't change very quickly. Now, there are other things that change. So we use technical analysis, right, to confirm or deny. But psychologically, I prefer to stay a bear until it stops being bearish. I sound simple, but so many people don't do it. So this is what my trade plan is for next week on this pair. You understand? Psychologically? And if it suddenly does this, I know it's no longer bearish and I should stop selling. So I'll let technical analysis to confirm or deny market conditions for my trade planning. Okay? Yeah? David Howard says, what is the best time frame you use for trading? So I will typically do it this way. I'll start here and say, does this confirm, do I have congruency between my bias and market conditions? So my bias for global macroeconomics right now, good or bad, right or wrong, is irrelevant, but my current bias is risk off, which is another way of saying macro down. Okay? So in that scenario, I'm a seller. So, you know, I looked at here, and at the time, it was resistance, so, right? So that's my first shot. The down, 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 up, up scenario is now just simply technical analysis. And that is a sell. Then the down, 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 up, up, you would sell this. Down, 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 up, up, you would sell this. Down, 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 up, up, you would sell this. Down, 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 up, up, you'd sell this, so on and so forth. Now, we are going to be challenged in here, and it's going to get difficult. So I have to pay attention. But if I'm truly a bear, I would believe we would break through that. Okay? So that's the first step, okay? David says, what time frame? So I'll start on the 4H. And I'm simply looking at this part. Is the market bullish, bearish, or neutral? And I'm already, my bias is a bear. So I have to say, are market conditions bearish? And so as I showed you here, sell opportunity, sell opportunity, sell opportunity, sell opportunity, sell opportunity. These are all bearish technical trade plans that, you know, in a bearish market. Okay, so I'll start there. But once you see a trade setup come together, meaning, let me do this one in white. When I'm like down, 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 up, up, this up, up part, I don't do on a 4 hour. So once I got that, right, because I have the lower low, right, if you notice this in the price action, I have my lower low. So now I'm thinking I want a lower high, so plan. Okay, I have the right market conditions, great. So one, I'm planning on a lower high, which would produce a lower low. Okay, two, I want to find price resistance. Okay, and then drop into a trade execution. So actually a farther setup, right? So I will look for that, you know, 1 and 2 on maybe a 15-minute chart, let's say. Okay, so I'll get off this chart and I'll go to this chart and I'll say, am I at resistance? So this is our trade plan from Wednesday, actually, but let's do it here. Okay, remember I showed you old support you drag across, right? Like I showed you over and over and over again. This is just another one. Okay, so I know somewhere around this price. Remember, we knew it way back here on January 31st. We're saying, okay, As bears, we want to sell high at resistance on a roll reversal. What used to be support would be resistance, somewhere around a buck, or not even a buck, around 63.63. Look to sell. Okay? But that's not enough. That's just the price. You guys following me? That's the price. So now, on yet maybe a smaller time frame, you could drop into a 5-minute if you want. But somewhere in this area, I want the reversal pattern. Okay? You see that? So in here is where you'd really drill into smaller time frames. So what kind of pattern would you be looking for? That'd be like double tops with a lower low, lower high, for example. This is classic, right? 1, double top. 2, lower low. 3, lower high. And you would be short in a scenario like this. But it's not just that this occurred, it's that this occurred on resistance you planned on 5 days earlier. Okay? Well, Lee, that's what it is. That's, you just defined what that means. Cool. So that's that. Do you guys want to do commodities now or later? Das says, could you show everyone where you sold your highs? I thought I did. There and there. So I sold up at 65, we're down at 62, so it's not big money. Okay, but now look, here we are on a daily chart. Okay. Oops, let's do this in white. You can still see there's, right? There's stuff going on. Okay, it's been a tough couple of years for Kiwi, faux show. And this whole time, right, the Reserve Bank of New Zealand has been cutting rates. Okay. Would I recommend Tesla stock? Yeah, like 1,000 years ago when it came out. Okay. Cool. Okay. So what we have here is failure to communicate. We're at support, yo. Okay. We're at support. So what I've been recommending the last week or so is you need to decide, we're at 50 bucks, right? I said this back when we were at 49.5, but whatever. We're at 50 bucks ish. And your next plan as a trader is to decide whether we're going to, let's say 65, or are we going down to 35? Okay, you make one of those decisions because quite different fundamentals would take place to create that, and that is you picking a team. If doing this would then help you decide, Should you be buying yen? Should you be selling yen? Should you be buying dollar? Should you be selling dollar? Should you be buying Canadian dollar in Norway, or should you be selling? I mean, it just sets up everything, right? The way I look at the world and trading, by the way, is through the lens of Newtonian physics. Okay? So the cog of oil turns, okay, along with other things. Okay? And this creates, excuse me, this creates the global economic machine. These all are related, right? So it would be very rare, for example, for demand for oil to go up and economic activity globally falling. Okay? It just doesn't work that way. And there's relationship between all of these, right? So that's why, like, especially with oil, if you believe economic activity is going to increase over the next 3 to 6 months, you would be a buyer like this. If you thought it was going to get worse over the next 3 months, then you'd be a seller of this. But then you would end up being sellers of several other things and buying several other things. And it all has to do with your one idea of that things are going to get worse before they get better. So you need to do that first. Once you have that in mind, you'll see clarity on your charts. Trading won't be easy. It will be easier. What are my thoughts on Elliott Wave? It's fine. It's price action folded in with some Fibonacci. It's fine. If you like, you know, you have to ask sort of like, what kind of trader are you? Are you an artist? Right? Are you a manager? Or are you an entrepreneur kind of thing, right? Okay, this is like your personality type. So I would say if you're a manager, like you like accounting, you're good at math, you're very orderly, then Elliott Wave would be perfect for you. I'm an entrepreneur, so I personally, my personality does not prefer Elliott Wave. I can't count waves and say, because of this other thing will happen. Oh, this is a 3, so this is going to be a 4. Now we're going to be ready for a 3-wave correction this way. I get it all. No, I don't get it all. I understand enough that I don't want to understand it anymore, but I'm not discrediting its value. So let me say one thing here. When I start out, when I say you need to create a bias, and then your job now is to set up technical trades to trade that bias. So if you're a bear, great. You know, you sell high at resistance in a downtrend. It's not that complicated. If you're a bull, you buy in an uptrend, but you buy dips. It's not that complicated. Okay? So making the decision is the most important thing. Number one, make a bias. And here's what will blow you away. I don't care what your bias is. You shouldn't care what my bias is. You could flip a coin, for crying out loud. Now, hopefully, if you're a master, if you're a true professional, you'd pick your bias based on, you know, data, you know, analysis. But honestly, you'll do just fine if you flip a coin. I'm a bear on everything. Great. Done. Because now you've made a decision and now you know how to set up all your trades. Now, the next part is, well, should I use price action? Should I use Elliott Wave? Should I use the CCI? Should I use RSI? Should I use MACD? Should I use, you know, I don't care about that either. I honestly don't care. The thing is, you have to be consistent. Stop trying to be right. Stop trying to outsmart the market. It's a fool's errand. I want you to be consistent. 2, trade your bias. That's all there is, guys. Everything else is smoke and mirrors. Stop complicating it. Okay? Over the course of a year, if you consistently trade your bias, for example, you're a bear, and all you do is sell in downtrends at resistance. Over the course of 52 weeks, you will have many weeks you don't trade at all. Some weeks you break even, and other weeks you make money. So at the end of the year, you are profitable. Why? Because you only traded when market conditions were favorable. Not every day, because it's a video game. Okay? This is Forex, not Fortnite. So NZ Share says, how do you make a bias? That's fundamental analysis. And I'm not going to go into that before NFP, but maybe after NFP we can talk about fundies a little bit. But like I said, this is just your interpretation of data. Okay? You get, right? You get 10 economists in a room, and they'll have 12 opinions. The important part is you've made a decision. You might interpret the data completely different than me. We're both right. And if you're a bull and I'm a bear, and all I do is take bearish trades over the next 52 weeks, and you only take bullish trades over the next 52 weeks, I am certain we will both make money. If you're losing money as a trader, it's likely because you don't even have a bias. You don't even know what team you're on, which means you're somewhere in between the bulls and the bears, right? You're somewhere in between these constituencies, and you're getting creamed. You buy, you lose money. You sell, you lose money. Okay? So you got to get off that. You got to get off that. Okay? Yeah, my pleasure, David. Thank you for your questions. All right, so let's talk about an event-driven, high volatility event-driven strategy. Are you guys okay with that? Cool. Fira says NFP consensus. Okay, what's the consensus to you? What have you been told the consensus is? What is FX Street reporting? You're going to get an average. It's really not that important. That's news. And if you're looking simply to trade the news, okay, fine. We can play that game too. But it's not important, okay? What is important is the trend. In that data set, so trend in NFP, and if you want trend in weekly jobless claims, I would also look at the employment subcomponent of ISM, okay? And you could look at the Challenger report. And I've put all of this into a document at FX Street. Okay? Hey, Hope. Okay? All this is great. And when you have a model, it pumps out a number. What's the number one question, though? Is it really the headline report? What's the number one thing we care about today? Anyone want to take a guess? I love you. I love you too, man. Oh, Nevis! Ow! I was just talking to people in Nevis. Yeah. Cool. Is it Nevis or Uwali? Yeah. The number one thing is, will the Fed change? That is the number one thing. Okay? The number one thing. The number one thing. Will the Fed change their policy? Will the Fed raise interest rates? Will the Fed cut interest rates? Will they change their language so that you would interpret they will change their policy? Okay? This and all economic data reports are just news. What will actually change the trend in the market is, will the Fed change policy? Now, listen to this, because this is where most new people mess up. And it's not their fault, because your college professor was wrong and the people on TV are also wrong. That's a pretty bold statement, okay? If Fed is perceived to cut, perceived, they don't even have to do it. If people say, oh my gosh, look at that Fed look at that NFP number. Holy smokes, the Fed's going to have to cut. Save me, Fed, save me. Okay? If today's result is interpreted that the Fed should cut, the US dollar will go up in value. Doesn't make sense, I know, don't fight me with this. Now, if it was any other currency in the world, it would go down. But this is not every other currency, this is the reserve currency. Okay. Okay. If the Fed is expected to raise, the dollar will be weak. Okay? So, let me ask you something. Is there any number, is there any number that's going to come out today that will force the Fed to raise interest rates? They're expecting 160. So would it be 175? No. 195? No. 205? No. 250? No. 300? I don't even think that's enough. Because they'll say, oh, it's a one-off. It'll have to be, 2 or 3 months in a row that we're doing 300,000. Okay? So let me state it again, and I am expecting an answer. Is there any number possible to come out of non-farm payrolls today that would force the Fed to raise interest rates? So the dollar's either going to be strong today or it's going to be neutral today. Okay? Yeah, Chuck Duck says it would be considered an outlier if it came out 410,000. Okay? But imagine it was 350,000 3 months in a row. Then they would, right? So, today, based on true fundamental analysis, not news. News is a one-off thing. Fundamental analysis is looking at the trend of all these reports, the trend in jobs, the trend in inflation, the trend in activity, economic activity, the trend in import-export, balance of trade data, these types of things. The trends in all of these things relative to the trends of the same things in other economies will help you predict valuation of currencies. So right now we're saying, look, there's a 99% chance that whatever happens today is not going to entice the Fed to raise interest rates. Therefore, the dollar's likely to just do what it's been doing, okay? And more likely, it's going to gain strength. So is there one way that we can validate this? How do we know if the Fed is expected to cut interest rates? And I'll give you a hint while you're thinking about it. Not just cut interest rates, but when they're going to cut interest rates. No, actually, it's not. You have to listen. I just said the dollar is either neutral or strong. So if you think gold is going down, then dollar is going up, Ali. Come on now. Fed Watch tool, thank you. Well, I'm getting that at la 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 la. La 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 la. Do da do. All right. I say, boy. Okay, check it out. Okay, there's the March. There's only a 10% chance we're at 125 at the March meeting. 24% by April. Okay. So we're moving up here. There's a much more likely chance in the June meeting that they cut interest rates. And I think if we look at this, I want to see if the historical. That's not very helpful. Okay, so it's been jumping around lately. You see this? Been jumping around lately over the last week. Right? 1 day, 1 week, 1 month. Okay, so it's gone from 24 and as high as 42%. So it's the likelihood of the Fed cutting interest rates in June has gone up about doubled. Not quite, but let's say it has doubled over the last month. Okay? And nobody, right? Nobody expects interest rates to go up by June. Okay, July is in the middle of the summer and isn't really considered a live month, so nothing really changes there. Go to September. And now you should see, check this out. Right now, 40% of market participants are pricing in right now a rate hike in September, and 29% are saying they'll cut in June and September, so that by the time we get to December, we'll be at 1%. Okay? So the majority of the market here thinks there's going to be 1 to 2 cuts in, between now and September. And as these increase, as these things go up, okay, we're looking at both. So you're adding both of these together, and even this one, because they're pricing that in. They're pricing 3 cuts in. But nonetheless, as these go up, the value of the USD goes up too. Because this is not a sentiment poll. This is money. Billions and billions and billions, hundreds of billions of dollars being contractually negotiated. So for example, if I lent you $1 billion for a year, I'll say, look, you're going to have to pay me an interest rate for this loan. And you agree to that. But I say, but look, over the course of the year, I think the Fed's going to cut interest rates, and that changes things. Or if I thought the Fed was going to raise interest rates, it doesn't matter if I'm right. What I think. I'm like, you're going to have to compensate me for that change in inflation or the change in interest rate, right? So we will have to negotiate the deal. Well, how you negotiate the deal determines whether you think interest rates are going to go up or interest rates are going to go down, or if interest rates are going to stay the same, right? So these are bank negotiations, bank to bank, right? Smart money to smart money, actually negotiating, signing contracts for hundreds of billions of dollars. And based on their actual negotiations, we can figure out what they're pricing into their contract as far as the inflation rate. Okay? Everybody follow me here? Oi! So the Fed is not by anybody. Look at this. Not between now and September, nobody is pricing in rate hikes. So the way I look at this is the dollar gets strong or it doesn't get strong. Okay? Now, that is based on contemporary analysis. There's something going on in the world, however, that is incredibly strange. We're at full employment, consumers have tons of money, credit is available, money is cheap, and the Fed is stimulating the economy. So that part is weird because it forces you out of your bank account, right? And it forces you into the stock market. Okay? That part is weird because it forces Americans into a corner. If foreigners start buying the U.S. Stock market, then that will attract the dollar. But that is not a normal behavior. It's central bank, the consequence of central bank manipulation. And that is an extremely rare thing. I don't know if it's ever happened before, honestly. And I'm a bit befuddled by it. So we got to be careful. So everything we got to take with a grain of salt. What I said is what should happen, or what has happened for the last forever, right? Right? But now we have this weird thing like the Fed's cutting interest rates, but everything's awesome here. So it's a really confusing thing. So if foreigners start buying our stock market because it's red hot, and why is it red hot? We're forced to be buying it. So if other people jump in too because maybe their stock market's bad, then that's going to drive up the value of the dollar, which is a really strange thing, but it's only strange because we're not in a free market. So be careful with that. All right. So let's go, I guess, to the euro dollar. Do I even have it here? No, but we can add it. Oops. You know, okay, and I'm going to move this from day trading to general analysis. Cool. Okay. Pavlo, FXStreet.com, the host of today's webinar, is the best NFP live announcement site. Okay, so first thing you should probably do is identify resistance. What used to be support is now resistance. And the support is obviously the monthly target. In this case, it's S2 based on the entry here. Okay. So we have two levels of support. Well, actually, one major level of support, sorry. And then resistance is this way. Okay. How many indicators is good? We can do it this way if you prefer. There we go. So I only have one indicator on here, but set up two different ways. La 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 la. Don't forget about CAD though too, because it's Canadian job support as well. Das Reed, what would you like me to trade? Yeah, what he doesn't understand is 40% of all currency trading is euro dollar. So I don't know what his thing is, but I'm trying to find out how I can help. Yeah. By the way, if you guys want to trade with me every single day for free, I usually go an hour and a half Visit tradersway.com, open an account. Even a demo's fine. In your back office, there's a button that says live webinars. So I'm live Monday through Friday at 8 a.m. Eastern Time, typically until the market opens. We conduct technical and fundamental analysis. I do a lot of fundamentals. La 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 la. So right around the 110 is probably a sell zone, between 110 and 110.50. If it drops like a ton of bricks, then we have to wait for a pullback. Okay. 225, red hot. 225. Boop, boop. How much money in Forex market? 5 trillion. Nice. The funny thing is, this is where you should be getting out. This was our target on Monday, so the fact that we're here now is really interesting. And then you should mark this one if you're doing price action as well, but it's already happened. So I'm just going to do the high volatility scenario. Remember, when you're scalping, there's no real fundamental bias. We're just doing volatility. So we're stuck in this mid-range, but the idea is lower low, lower high. So this is actually still in the sell zone. Okay. So the way I do the high volatility stuff is if the initial reaction is down, irregardless to my bias, it's just a retracement type trade. So, right, we're at a 786 now. So we got to be careful. You were outside the zone you see here. Ideally, if you were going to do it, you want to be around this sell zone. Okay. If this goes up, okay, if this goes up over time, let's say, I don't know why I'm doing it this way. If this goes up, this is fine because our actual trades are much higher, right? Right? This was the zone we had earlier. So this is a higher time frame, which you'd probably get on Monday. So again, there's everything is determined by the plan. Okay, so a fundamental plan looks like this. Well, it's technical, but this is the real plan. You understand? So a high volatility event driven strategy is just the news came out like this. So the rules of engagement is wait for a retracement somewhere right, between the 3A2 and 618, and do a continuation trade. Okay? It's not fundamental, it's just technical. Okay? There's no thought about it. It's simply the market's reaction, a retracement, and try to continue in that reaction. If it goes up, it's hardly any money, but the big trade, the better trade is up here if you're a bear, or if you're a bull, you should be looking for this type action, okay? Because I think we can agree that this is more of a downtrend than an uptrend since the beginning of the year. So for you to reverse and say you want to be a bull in a downtrend, you need to be at the lower end of our cycle, the cycle being sort of down, up, down, right? Down, up, down. For you to not just go back to the deviation, you know, the high deviation from the mean. If you're expecting to go higher than that, you really need a double bottom, higher high, higher low, breach, right? There's a lot of analysis that needs to go into this, and it's not going to really happen on a 5-minute chart. All right, you need a complete change of trend. Okay, so in this case, you know, when you're a bear, the higher you are, the better you are, because you're selling when it's overbought. And the same thing, like if you're expecting a small reversal off of here is preferred, but to get a full reversal, you need a reversal pattern. So like, let's say you would need up, down, up, down, up, and that's how you'd reverse this. Okay, you'd reverse it this way. But you notice how long would that take? On this 4-hour chart, 2 weeks. Okay. So let's do a quick look around the world. Let's do yen pairs. Okay. Let's do this. This one's fine. So this is a plan from, I think it was yesterday. And I got a mediocre entry yesterday. So we were here yesterday, and my plan was to sell in this zone, which I did. And yeah, it's mediocre, but I'm just going to move my stop and remove the risk going into the weekend. Don't really expect much. It's not a very good trade. You can see, like, I wouldn't call this a hardcore downtrend, but I don't want to be a bull either, not yet. So what I did was what I did yesterday was I sold next week's pivots. So this is Monday's trade zone. This is Monday. And I said on Thursday, and then traded Thursday, Monday's trade plan. And I had a little extra resistance up here. I decided not to re-enter because the first one was a loser. I don't really like adding to losers. So anyways, so I did that yesterday, and now, you know, I got a little bit of profit, but I'm looking for this, and I'll still probably break even. I'm gonna have to get lucky on this, but okay. I mean, I suppose I can manage it this way if you want. I can manage it that way and try to stay in. But what I think is what I need to happen is 120.50 has to hold. The midpoint psych level has to hold, and that this drops back down. Okay, you can see we're trading off the roll reversal, so you know it's really not a bad trade, it's just not a good trade. Okay, CAD yen is being impacted by a lot of things. Now, I don't have the Canadian jobs report in front of me. What was it? 34. So that was a hot number. So the Canadian dollar is strong, and I think a lot of people are anticipating an oil rise more than a fall, but we haven't gotten that yet. But Canada is doing all right recently. Okay. And so you'll see my CAD yen is a lot less bearish than the euro yen. Okay. Does everyone see what's going on here? Yes. If the Fed is not expected to cut anytime soon, the dollar would weaken. Yes. Absolutely correct. Pound is being beastie. I don't think I'm on the pound. I was earlier. We can do Aussie. Okay. So I shorted twice. Was it yesterday or Wednesday? I might have done this on Wednesday. So let's see. I have one short here, one short here, and one short here. Because I did these two on 2 different time frames. And they're doing all right. So what is this? 76 and a half. We're at 73 and a half. So this one's 300 pips already. And then these are at 74 and some change. 74, 74.20. We're at 73.20. So those are 100 pips each, roughly. So about 500 pips. And the cool thing is I can't lose any money. They're all at break even. Any questions? I'm worried about this. If you're interested in what I'm worried about. Rebs in a short on this as well. Very cool. Up about 70. So you got one of these, right? So you're short at 74. Yeah, so this is 70. This is about 100. This is 70. This is about 90. So for sure 150, closer to 200 pips on these. And then this is a full 300. So that's cool. Lucas got about 75. Right on. Marcus, you didn't see me do it? I even explained it. Okay? If the initial result is down on a high volatility, event-driven strategy, then the scalp, which is not a fundamental trade, is simply sell the pullback. And in many cases, not all, but in many cases, you get a continuation. Yes, everything currently in the United States looks fine. We're at full employment, but there's low inflation, okay? So, inflation's too low, so we'll call this I. And I is too low. Productivity is too low. So the Fed is stimulating the economy to try to increase inflation and spur productivity. And I don't know if it's the right thing. I think they're thinking old school thoughts. But anyways, that's what they're trying to do. Okay. But oil just fell from $65 to $50 a barrel. that is going to crush inflation. Crushed little eye. Crushy. So in this case, it's sort of reverse. What the Fed needs to buy oil or something. So the funny thing is, like a coronavirus situation, the Fed could cut, but it doesn't solve the coronavirus issue, right? They might cut to help spur economic activity, increase demand for oil, right? So productivity, they think, might go up if you made money cheap, but the problem is money's already cheap. And then if productivity goes up, then demand for all things go up, and therefore inflation goes up. And we get productivity to 2%, we get inflation to 2%, the Fed's happy. But I don't think they have the right tools for that anymore. So some people will simplify, and of course I want you to simplify. I want you to simplify your bias. Some people believe interest rates in the United States will go negative. USA, -%, like everybody else. This will influence your decision on how to trade. Okay? So you would buy, if that's your opinion, you would buy dollar, yen, Swissy. That's why I told you, like, stop listening to the news, stop listening to people like me. Just look at the facts. Go to the Fed Watch tool, and as you see everything to the left showing more and more likelihood of going up, again, that's not opinions, that's things actually being priced in, real negotiations with real money, and that would strengthen the dollar. And the reason for it has to do with behavioral finance. How many people here caught that behavioral finance webinar I did maybe 2 months ago? And I explained why that happened. You are not alone. Coffee went cold, man. Cool. So we did all those. We can go to the Swissy pairs. So pound Swissy, this one hasn't worked out that well this week. So 2 Mondays ago, our plan was to sell the pound Swissy around 27.5 and drive it down to 24.5. And so far, not wrong, but pretty mediocre results, right? Started the month pretty good, pulled back, happened a lot of pound pairs in particular. And so I don't know if that's going to happen or not. TBM says, is it possible for euro to become a funding currency? No. And it has nothing to do with the interest rates. It has to do with other things that make it a funding currency. Okay. So anyways, that's where we're sitting there. You know, not good, not bad. Neither here nor there. Kiwi, Swissy. This is where we were. Let's see, this has been a whole week, 2 weeks, 3 weeks. So 4 weeks ago, we were talking about how to break out if you're planning for a breakout, or how to stay in the trend if you're a bear. And of course, the trend is always your friend until it betrays you and stabs you in the back. Okay? So again, short here, and this would have been a great re-entry. This is a great re-entry, and this should continue. Okay? This is a little trickier because this is a sort of the monthly pivot. You didn't really get a great entry unless you were doing a front run several days before the open. So the best trade is here. If you shorted here, then your target is $60, basically. Not quite, but basically. Right? So you have to be about 3 days in front of the market. Okay? 3 days in front of the market. And therefore, now the next thing that is likely to happen to whoever shorted up there, they're expecting this, and this. So that means, well, I guess we can't do that this week, right? So this is kind of already done. So what they're thinking is this, and this. So we got next week and the week next, and then we will hit that target. Okay. If you are a bull, like I was saying before you can be a bull in a bearish market, you need the double bottom, higher high, higher low scenario. And of course, this is just like I showed you before, simple price action where you look for the roll reversal. What used to be resistance is now support, and you'd be along here. So for that to occur, what you would be planning on as a bull in something you recognize as a bearish market is the double bottom, higher high, higher low scenario, which means you're looking here. And that's not even going to happen next week, most likely. So you got a whole week really to prepare, if you're a bull, to look to be long. Max, Canada and the United States release job reports at the same time. So anyways, I like to leave myself little notes like this. So the way I would draw this is it'll probably do this, and then this. Okay? You hit the target early next week, full counter trend back to the central pivot, in which you would front run the next week, and then by probably the middle of next week, we will hit our monthly target. Okay? And destiny will be fulfilled for a bear. And that destiny is front run the monthly M3, targeting the monthly M1. Easy, right? Swing trading, brother, swing trading. So, a little bit of sales pitch coming. Get ready. Defend yourself. I have a swing trading group. We meet every week. We plan trades 2 to 3 days in advance, worth 100 to 300 pips each. You join the swing trading group. We do it live. There's also a swing trading video course, so you know how, but then we can get together as a group and we do our setups together. But that does cost money. You'll have to insert a credit card and pay for the course and join. And then be there every month. Great. I'm also about to do a day trading course. I'm going to do the day trading course with the swing trading group because day trading is a form of swing trading. So there's monthly swing trading, there's weekly swing trading, and day trading I consider another swing. Okay? You understand? So I'm going to do that with the swing trading group, and there's no extra fee for that if you're in the swing trading group. So if you only have like an hour or two a day or an hour or two per week to really focus on your trading and setting up your trades, then you need to join the swing trading group and learn how to day trade, swing trade for a day, swing trade for a week, swing trade for a month. Okay, they're all put together. Okay, so if you're interested in the day trading course, I'm going to record it in about a week's time. We're going to do it on a Monday, on a Tuesday, and on a Wednesday. And then on Thursday, we do our weekly swing trading live group. So it'll be 4 days in a row that we meet. Day trade, day trade, day trade, weekly trade. All there, la-di-da-di-da. If you're interested in joining, it's swing.fxbootcamp.com. Okay? It's not a lot of money, but it will require a credit card. There you are. Swing.fxbootcamp.com. All right. It looks like I missed somebody's question. Well, I'm sorry, bro. There's a lot of people asking questions. So, Wayne, why didn't euro dollar drop with the release of NFP? It did drop after the NFP release. It did this. Then it did this, and I don't even know what it's done since then. You can go back. What's the price to join? Why don't you go to swing.fxbootcamp.com? It's on the homepage. There's really only one page, so it'll tell you there. Swing.fxbootcamp. You got it, man. You got it. All right. So it did fall. You see, look, it did fall. It did retrace. I'm going to remove some of my risk. The logic here, guys, is that, let me clear this out. When it's a scalp, you got to remember, I'm all about the trade plan. The scalp is a high volatility event-driven strategy. So you got the big down in this case. You should have a retracement somewhere between the 382 and the 618 Fibonacci retracement, and then you get a continuation, right? Lower low, lower high, lower low. That's all it is. Okay? That's all it is. So this should happen fairly quickly. So if a half an hour goes by and I'm not making money, I'll walk. I'll take a walk. It's such a meaningless point towards my entire trading career, right? Like the swing trading group, like I said, we plan 100 to 300 pip trades, right? Most people in the first few months, they have their first 1,000 pips, right? Kind of thing. This scalp on NFP is probably what? Maximum worth 40 pips? I got chunks of corn bigger than that, right? So it's like, this is for fun. This is for entertainment. This is for me to enlighten you that I know what I'm doing. I have lots of experience. I've learned a few things over 20 years of trading Forex live in front of FX Street. You know, I've been around. That's cool. Okay? But scalping like this, even with non-farm payrolls, it does, you know, it's tiny. It's really tiny. When you understand why money moves around the world, aka macro, your trades are just worth more than just trading some volatility off really a meaningless news report. Like NFP is not completely meaningless, but when you say NFP relative to the Fed, it had no impact on the Fed. there was nothing likely to happen today, as we talked about earlier. There was nothing that was going to happen today with NFP that would affect the Fed. Therefore, nothing's changed. If nothing's changed, then the value, the maximum value of this scalp trade, in my mind, is nearly worthless. Because it hasn't changed anything. There is no news. Nothing happened. Not the volatility. There was some volatility. But they're not going to have an emergency meeting at the Fed going, oh my God, did you see NFP? We got to do something to save the world. Okay? You understand? So this is a really low value scenario. So I don't mind removing risk and all that kind of stuff. Whether I make 40 pips or lose 25, it barely happened, right? But what you'll see is once you start to understand why the market moves, then the value of your trades goes up exponentially. Because you're in with trends that continue for days and weeks and months. Like one of my trades that I have going on right now, let's open this sucker up. Let's move this. This one I've been short since May 9th. So since the beginning of May. May, June, July, August, September, October, November, December, January. I'm on my 10th month for that trade. And now check this out. I should probably bring it back. Check this out. I have $100 of cash leveraged, right? I've made 850% return on investment just collecting interest. This is why I'm like Trader's Way will blow your mind. The swaps are redonkulous. I'm up 850% just on the swap. Plus I have another 700 in pips. I'm close to 1,600% return on investment. Yeah, I know, right? Why? The value of that trade was worth more. It's worth more. I have more logic on there than just some volatility after a news release, right? You see what I mean? So the scalp is never really worth much. It's almost meaningless. Your knowledge, your skill level, your value creation should be so much higher than, you know, a scalp. That's all. I do like to scalp, but, you know, it seems silly to go after 25 pips, right? Shows, I just did. Das, are you, well, Das is a little slow, I think. I'm sorry, Das. I just did. But whatever. All right. So there we are. If this makes a lower low, I will just move the risk here. I want to add a little more data, though, so I'm going to kill all this analysis that I just did for you, sorry. And I want to just make sure I have all levels of support, so. Right on, Max. Max, join the swing trading group. Like I just showed you, it's not a lot of money, and you're going to learn how to day trade, right? Weekly trade and monthly trade. Probably requires you an hour a day, probably less. So if all you got is an hour a day, I can teach you how to trade. Max, there are no secrets in trading. That's the whole point. You're not trying to beat the market. The market is quite transparent. The market wants to do what it needs to do. It's simple It's simply business. It's human beings trying to conduct economic activity that's beneficial to them, right? So it's very, very logical. There's no... Das, you bore me. Goodbye. All right. Sick of that. Taking up your attention. All right. So this is what I got. If it makes a little bit lower low, I'm just going to... Yeah, okay. So it's made a lower low. So I'm moving my stop here. Whoa, 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 whoa. To there. Cool. Cool, right? Nice. So now I'm here over zero on the scalp. It goes down and I make money, or it doesn't go down. Okay, cool. Let's do this. Would you like me to do Bitcoin? Das is gone. Das has been booted. Das booted! Yeah. No one's interested in Bitcoin? I can skip it. Okay, one. I like that. Oh, maybe there's a bit of a delay. All right. XRP, Pete, you keep asking me about XRP. I don't know anything about XRP. Okay. I don't know much about Bitcoin. I've done... Oh, I don't know. I know it's more than 120. I've probably done $150,000 in Bitcoin transactions this year. But it doesn't make me an expert. But other things I know much less about, meaning I know nothing. So I don't mind doing Bitcoin. In Bitcoin, there's enough market participants that, as you can see, it trades very technically. It's pretty straightforward. So I can show you what the plan was last week, and I'll show you what the plan is for next week. Does that make sense? Okay, so let me zoom in a little bit. Okay. Interesting. I don't remember it this way, but I guess I was looking at it with weeklies, not monthlies. So let me clean this up. I had it this way. So check this out, guys. Swing trading, bullish weekly bias. Okay. Come on, click in. Cool. So I got to zoom in here. Last week's trade plan. So by last week, I mean last Thursday or Friday. I guess it was the swing trading group. So last Thursday, we were here. And I said I looked at the low, and I looked at the high, and I looked at the close, and I looked at the roll reversal. And this was our buy zone here. But remember, on Thursday. So we needed it to drop Thursday, Friday, Monday, Tuesday. Hit this buy zone. So our plan, not yesterday, a week before yesterday, we had our buy zone set. Okay? So here we are on Friday, and I'm doing kind of the same thing. I'm looking at the low, the high, and it looks like we're going to close high. And I'm going to look at a roll reversal here. There's one here, and then there's a shoulder here. So I got this set up. This is next week's buy zone. I want to buy it between 95.72 and 94.27. Okay? If I'm a buyer, this is what I'm doing. This is Bitcoin. What do you think? Any thoughts? Wayne, are you a full-time Forex trader? For about 20 years, Alex, yes. Right now, I'm also a full-time college student. So the only thing I have time for is day trading and swing trading. Of course, they're just pivots, right? Yeah, those are just pivots. Nothing complicated by it. I have a bias and I use technical analysis. There's nothing complicated about trading. Now, us as human beings, we're very complicated. There's no doubt. But there's no reason to be trying to figure this out on your own, like I did. There's not necessary. There's more efficient ways. So as you can see, we can rinse and repeat this, okay? Okay, new high, so now we're up here. So the new plan is what? Okay, and we had a high here. What's the new plan? Okay, and we have a new high up here, so it's the new plan. And if things go well, of course, we don't know what will happen, but if things go well, it'll do that. The thing is, I have a plan. I have a bias and a strategy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 up. What do I think is going to happen next? Down, down, buy. Not crazy. Ray Dalio is smart. His analysis fundamentally is great. It's what you should be doing. People call him a genius. It's just what you're supposed to be doing. I think he's a little crazy right now. I think he's made so much money and people have worshipped him so long that he's a bit of a nutcase in my opinion. But the general ideas are great. But, you know, his 758 principles of living his life, little crazy. But maybe he's a genius. I don't think he's a genius, but he's not normal, and that is a compliment. Cool. So anyways, there's a Bitcoin. Very nice. Very nice. Gold. Gold is just on trend. Okay, guys, it's fairly easy, right? Bulls are doing this. Bears will need this. Okay, pretty straightforward. Here's the average price for gold over this period. When it deviates above the average price, it tends to go that high. When it deviates below the average price, it tends to go that low. So we can call this overbought. We can call this oversold. And it tends to go like down, down, up, up, down, up, down. And the way I look at it is, it's going to do that forever and ever 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 until it breaks out. So a bear is really hoping for something like this. Up, breakout, okay, that kind of thing. And if they do, you basically get your M3 to M1 scenario. If you're a bull, you get your M2 and your M4 is up here. So again, the only difference with this is bias. It doesn't even matter which one you are, you just have to be one. I don't care how you get to that bias, you can flip a coin. The thing is, this is the interesting thing if you want to know it. This is absolutely, completely, ridiculously obvious that it's going to hold there. I don't know how long, but if you are a bull on gold, if you were not open to buying this in advance, you don't have a clear understanding on how to trade. Now, you might get really mad at me and all that kind of stuff, but I'm saying that is the exact price bulls would be looking to buy. Not because of the mean reversion or the regression channel and stuff. It's a simple swing trade. Oops. Okay? So if you don't know that, you've got like, you're trying to play baseball without a glove or a bat. You're missing some pretty big tools. Okay? So this is very obviously a bull, and you should be able to know the exact price that we're going. Okay? And the cool thing is that's why this held. There are some bulls. Now the thing is, we don't know how many. So if bears say, look, you've had your run, we're treating this like a double top, then this is what bears are going to do. You understand? This is us predicting what bears are going to do before they do it. Bears consider this a top. What happens after a double top? Okay, you're going to get bearish price action. Okay, so bears would first consider trading the double top, which is already marked, right? The first target is they're going to drive it down here, and then the second entry plausibly is in this zone, and this is our trade plan for next week. You understand? That if you are a bear, next week should already be completely planned out. If you don't know yet what you're doing next week, you are not trading properly. Let me say that again. If right now you don't have a solid, clear trade plan for all of next week, you don't know how to trade properly. You might have some of the pieces, but like I've been showing you, typically it's like Thursdays, we have our trades set for Monday, which gives us the rest of Thursday and all of Friday to be patient and disciplined to set up our trades properly and take them. Okay? Our trades are set like 36 trading hours in advance. If you show up and you open your charts and you're looking for a trade, you won't make it. You're walking in circles through the desert, and your trading account is going to at least suffer, but almost for sure die. Okay? Let me tell you about heartache and the loss of God, wandering in hopeless night. So we did oil already, right? Yeah, we did oil. Once again, you need to be on this. Are you a bull or a bear? You need to decide. After that, there only is, right? What's next? If I was a bull, if this doesn't start behaving, I'm going to be buying around 44. That's what I'm thinking right now. Faux show, says 8. I am not a genius, no. I am a hard worker. I have a lot I can improve on in my life. Okay. All right. La-di-da-di-da, da-da-di-da-di-da. Beast. I guess we can do Beast. So I have this marked as support already. I want to drag this across. So we got a regression channel going here. It's telling us this market is more bearish than bullish. But if I wanted to be a bull, I would have this set up as this. Okay. If I wanted to be a bull, this is all set up as a bear, but I'm just saying, if you want to be a bull, you're going to look for this next. Am I still long Euro? I was never long Euro USD. Why would I be long Euro USD? Cool. What would you like me to cover? Let's do some requests. Am I still short? I moved my stop to break even. By the way, check this out. There it is. This is NFP. That's what... Okay. Unemployment rate was little changed. Notable gains occurred in construction, healthcare, transportation, and warehousing. Cool. I know a guy that he used to own a trucking and warehouse company right here, transportation and warehousing, because I live next to a very busy airport. He sold his company, and he now flies in his jet. And I don't mean like a net jet. He owns his own jet. And he flies down to Florida to get in his yacht. And he flies around, doesn't sail, he motors around Florida in his yacht. And I mean yacht, not boat, yacht. And then when he's sick of it, I just can't take it anymore. He gets back on his jet and he flies back home. And he's a trucker. He just owned his company for 25 years or something, worked his butt off, grew it up, got a lot of men working under him and all that kind of stuff. He had lots of trucks on the road, added a lot of value. Now this ex-trucker flies around in his jet and sails around in his yacht. And you should think about this. This is going to be your client. Okay? Your client one day is going to look like this. You should often try to think of your client. The person you're going to be managing money for one day as a Forex trader. Okay? You should think of them. You should actually like write down the story of their life and what kind of person they are. Now think of this guy. Okay, yes, he's got a private jet. Yes, he's got a beautiful yacht. But he was just a trucker, small business, entrepreneur, hardworking kind of guy. But he's probably not super educated. He probably doesn't know a lot about global macroeconomics, although a lot of his customers were foreign companies and and all this kind of stuff because he had to move things around, pick the things up at the airport, put them into the warehouse, take it from the warehouse back to the airport or back to a train or to a truck or whatever. But it's a real person. And they're going to look to you for advice and consultation. And they may still have interests in their business. And they'll say things, well, tell me about the economy. How are things going? Well, how's Europe doing? What do you think about interest rates? What do you think about the stock market? How should I be worried about having to lay off some of my men? You need to be able to talk intelligently as their economic advisor, as well as their a trader that manages either their risk or their money for them. That's why I want you to grow. AMFX, we have many people that are very successful. Anyways. So, just piece of advice, right? Again, the reason I say that is it's so easy to trade Forex like a video game, and you get into the excitement of it and short-term trading and volatility and scalping and how many pips did you make today? And you forget that you're trying to actually run a business and offer a value to a customer that's going to need either for you to manage their money or manage the risk. And what I mean by manage risk, right? I have another friend that does business in something like 27 different countries. And the last time I talked to him, he was doing like $5 billion a year, okay? He would come to me and say, what is the euro going to do next? The reason for it is he'll sell, let's say, a $20 million contract to someone in Europe. They're going to pay him in euros, and he's not going to get paid for 4 months. But he's got to produce a product and deliver the product in that time frame, and at the end of 4 months, he'll get paid, but he's worried the value of the euro will fall over the course of 4 months, which is a pretty reasonable worry. So it's your job, first of all, to have an intelligent response to that concern. And then second of all, if you're the one that's going to hedge that risk and make sure there's no downside exposure, then you also need to know what to do, right? So I want you to think this way. I want you to move your thought process this way. What do you know? What should you know? What kind of value could you provide to a client? Like, what would a client ask you to do? If you think you're going to go to somebody who has money, because that's why you're approaching them, and you're like, hey, I'm a Forex trader, give me money. They'll look at you and say, well why? AMFX, I'm not here to sell you. You don't want to join the swing trading group? Don't join the swing trading group. Anyways, if you think of it that way, like what kind of service? Oh, what I was saying is, if you go to that person and say, give me your money, I'm a Forex trader, I'll trade it for you, and they'll look at you and they'll say, well, why? And if your response is, well, I can make you a lot of money, then you have a major disconnect. They already have a lot of money. They don't need you. And it's a real put-off, too. It's like a car salesman kind of thing. They're like, what do you mean? What are you talking about? And it sounds like you don't have any money. You're like, give me money. And why should I give you money? Because I'll make you a lot of money. Like, there's such a weird disconnect, right? So you need to start thinking differently. You need to start thinking, what value can you provide to a customer? Now, this thought process is a business process. All businesses on the planet provide some sort of value to a customer. So I want you to think of your responsibility as a foreign exchange trader is not to just make as much money as you possibly can. What your role and responsibility is to be able to provide value. So if I said, I'm worried because I have a big contract in Europe right now and I'm not going to get paid for 4 months, you should say, well, we can do this, 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 and this. Okay? And they're like, oh my God, really? You're like, yeah, I can totally lock that in so that you're not going to lose money over the next 4 months. But because my hedging is dynamic and responsive to changing market conditions, I can actually tweak things so if the euro is falling, I'll protect you from the downside. You're not going to take losses on that contract because we'll be making money on the way down. But when it rises, I'll stop hedging so you can benefit from the appreciation from the euro. So I'll protect you from the downside. And if things go well, you'll gain from the upside too. And they'll say, oh my gosh, Jean-Guy, you can do that for me? Oh, thank you, because I can't sleep at night worrying about the changing in value. And by the way, this guy that does $5 or maybe even $6 billion a year, and when we were having this conversation, he sat on a board with me, by the way. That's how I knew him. So we're having drinks after, and he's like, Wayne, I'll tell you, sometimes I don't know if I'm in the foreign exchange business or a trade business, because every time he does a deal, now he has to worry about Forex. They're like, yeah, we'll do $100 million with you, but it's in a different currency. Right? So like at least 50% of his business is just freaking out about Forex. That's his problem. So where's your value? Your value is, I can take over that risk so that you can focus on running your business and doing what you do well and what you're passionate about. How many people find that that would be an amazing value that you could offer somebody as a currency trader? And do you think that is better than saying to someone that does $6 billion a year that you can make them a lot of money? Which one do you think he wants? Okay, so anyways, I digress. We're looking at NFP here. This is an NFP. This is the household survey, and the other one's an establishment survey. Here it is. So this is where they survey people in the home. This is where they look at payroll stubs. They're completely different methodologies. They're very small samples relative to the entire country. And from that, they pull a rabbit out of the hat and they say 3.6% unemployment rate. Amazing, huh? You're like, really? But that's what they do. And here it is. And they can break it down because it's they love all this stuff. So there's nerds somewhere going through all of this. So you're less than 25 years old and you have less than a high school diploma. Okay? Trying to see what this is. Is this percentage? What is this? Number, employment. What is this? 3.2. I think that this is what no. I don't know what those are. We'd have to look at them. Not sure what those are. Is that percentage unemployed? You gotta be careful with data. Because I'm like, really? 3.2% of people 25 years and over, 3.2%? But no matter what it is, if you don't have a high school diploma, you're significantly more likely not to have a job. Okay? And if you have a master's degree from Harvard, lots of people are going to want to hire you. I think that's what that's saying. Anyways. Cool. So you can read this whenever you want. Cool. So MFX, you were in the swing trading course. You're in the group. And I think you're being sarcastic, right? So are you not happy? You should get involved, man. Email me, talk to me. We had such a great meeting yesterday. We spent like 2.5 hours, and what we did is people volunteered. I made them co-hosts. They shared their charts with the group, took the camera and the mic, and we discussed their logic, their trade setups, their trade entries, their trade plans, their risk management, all live with each other as a group. And people took turns. I think we went through 4 or 5 people. Took 2.5 hours. So it wasn't like a teacher sitting at the front of the room because everyone's already watched all the videos. This is us going through their trades and their trade plans. We had a fantastic time. Right? The sort of the feedback was from many, from 2 or 3 people wrote me and they're like, they said they felt that they hogged up too much time and they got too much personal attention and too much feedback and they worried about everybody else. This is what I heard. This was the criticism, that they got too much personal feedback. So we'll have to work on maybe someone was suggested, I think Joe suggested that maybe I do a timer and we do, you know, we go through more people faster, but I don't think more of the same is better. I think less and more focused is better, but we can talk about that as a group. But yeah, we had a good time. I really enjoyed it. All right. Let us pick on Aussie dollar for a while then. Okay, Aussie weak versus yen. Okay, Aussie weak versus pound. Kiwi weak versus Aussie. Aussie weak versus dollar. So we learned that Aussie is weak and Kiwi is weaker. So therefore, so you know I'm already on Kiwi Swiss franc, so I'm crushing it on the Kiwi Swiss franc. But let's look at all the other. Am I saying Swissy? I mean Kiwi. Aussie, Kiwi. So we know Aussie's weak, Kiwi's weak. If I was saying Swissy, then I apologize. Let's see. That's kind of what we did, Max. It was great. I used to have, this was years ago, we used to have a couple of members in China, and I was blacklisted in China for a while. Like all of a sudden they couldn't pull it up. That's been several years now. We have quite a few people in Asia. I don't know about mainland China, but quite a few in Hong Kong. But I don't know. Why are you avoiding talking about the random reaction that gold just made? Oh my God, am I... Oh. All right, everybody, let's do gold. I was drilling down on like the weakest currency on the planet and going to set up trades, but all right, let's go look at gold and its randomness. Gold. Here it is, XAU. All right, well, my apologies. Okay, this goes back a long time. This was months ago. Okay, so let's see. All right. So can we agree that this seems to be generally up? Cool. Let's drill into a smaller time frame. This is a buying pivot. So if you're a bull, you buy this. If you are a bear, you sell this. Where's the randomness that you're talking about? Crypto. Talk to me, Goose. What randomness are you talking about? No, I just thought maybe I was missing something exciting. I can see that it did drop and then did rise. Okay, that's fine. Okay. Doesn't change much for me as a trader, but let's try to look at this technically. So there's one resistance level. Let me back out actually. When I get this in here, okay, I guess we'll do it this way. It's kind of like here. All right, and then we'll do this, and then we'll do this. All right, so here's how I look at it, and so I'm not sure your unexpected craziness or whatever you said. Okay, if you're a bear, you are now looking to sell here, so you're going to look at smaller time frames for things that look like that, but maybe on a 5-minute chart or a 15-minute chart, okay? And if you're a bear, you're going to do the same thing here, right? Maybe it goes up, then it comes down, and then you sell. So if you're a bear, okay, you're going to sell here or here. If you're a bull, and I'll do this in a different color now, this was your buy zone, and this was your buy zone. So, right, down, 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 1, 2, 3, right, head and shoulders, roll reversal up. Now it's going to need to come up, come down, come up, come down, and come up, right? But most likely, it's going to, at least on the short run, be challenged here, and it's going to be challenged here, right? So, oops. So who asked for it? Crypto. Oh, look at you. It should drop. That's very dangerous language. It doesn't have to do anything. Okay? You need to look at this differently. Are you a bull or a bear? Let's say you say it should drop. So you're a bear. You believe the dollar is going to be strong and gold is going to be weak. Okay. If you're a bear, you are now setting up a sell in here. So let's do that. So you drop in now into a smaller time frame. Oops. And you say in here on my 5-minute chart, let's zoom in even further. You are looking for a reversal pattern. What do you want that to look like? Well, I would say probably something closer to this. If it does that, then you sell it. If it doesn't do that, you don't sell it. And it'll probably rise, in which you will let it rise to the next level of resistance, in which you will, again, look for a reversal pattern. But I think it's very dangerous that it's supposed to do something. No. You're supposed to do something. So you should have a trade plan to say, if it goes up to this price level and I see a reversal pattern, then I will short. You're supposed to short if it does that. Okay. What this is saying to you fundamentally is if this goes from this price to this price, the Fed is not going to cut interest rates further. But I clearly articulated that before the news came out. You understand? So that's all that is. The number was good enough that the Fed is not expected to cut interest rates. So what you'll find is that June data on the Fed watch tool will probably fall, which means I told you when it goes up, the dollar will gain strength. When it goes down, the dollar will lose strength. You understand? Oh, crypto lost $10,000. Yeah, but he might have 5 million in his account, and that'd be nothing. So, okay, cool. So, here's what you're supposed to be doing, setting up a trade plan here. Okay? You're supposed to be setting up a trade plan. And in particular, I think you should be more worried about next week, not what you're going to do in the next hour. So if you are a bear crypto, okay, then your trade plan will look something like this. You're bearish, so you must believe that this is a top. Cool. And that we're currently in a range. Cool. And that because you're a bear, you also believe we're going to make a breakout to the downside. US dollar is going to get strong and gold is going to weaken. Okay. So therefore, your general assumptions using technical analysis is this is your plan A. So I will write it down. Okay. And similar but different, this is your plan B. Hang on. Okay, and so you got to mark that down now. Okay, plan A, plan B. Understood? Okay, you need to be planning your trades, not reacting to some 2-bit news release. Okay. Yeah, I knew people that lose $10 million in a couple of weeks of Forex trading and they thought it was no big deal. So how much money you make or lose is irrelevant. Or should I say, it is relative to your money. But anyways. All right, so there's gold. Great. It went up on the news. But I can show you, like, just price action alone. Let me drill back in here. Let's go into, like, a 30-minute chart. Even just price action alone, like I was talking about earlier, you know, here's the bottom. Right? And then here's the roll reversal. Right? It's just price action that occurred. Okay? And this is why I don't want you to try to, how do you say it? I don't want you to outsmart the market. I don't even want you to try to figure out the market per se. If you had a bias, this would be a lot easier for you because you're going to recognize that we were in a range. So I'm going to mark the range. We were in a range, okay? And that this move to the top was a breakout of the range, okay? You see that? And you know how to trade a breakout. Breach, roll reversal. So now it's off that area. And continue. Now, a bear would disagree with that, of course, but a bear wouldn't be selling in a roll reversal like that. They might sell high up here and have their turn to take it down, but they're not going to sell here. And of course, a bull would buy here. You just triple bottom, higher high, higher low, roll reversal up. Okay? It looks confusing when you don't know if you're a bull or a bear. If you're a bull, you have to understand everything you're looking at has been filtered through a lens, a bullish lens. Okay? And if you're a bear, everything's filtered out through a bearish lens. Okay? So a bear will look to sell here. Will it fall? Well, I don't know how many bears there are, but I know a bear will sell there and I know a bear will sell there. Okay? And the interesting thing is what we don't even know is like, how do the bulls and bears work together? Because it could definitely do something like this. A bull takes profit, a bear takes it down, a bull gets back in, and I know if that occurred, those that are trading in sort of this zone, I know where they're going next week. I know what their target is. If they're buying a dip back to, let's say, 565-ish, their target for the month of February is there, 1650. Okay? So if you buy a dip, let's do it this way. Okay? This predicts this. That's for the month of February. Next week, the trade plan for those same bulls, you understand, the same bulls are thinking this and this next week, which puts them halfway, plus also we breach this old resistance. So guess what's going to happen next? I've showed you price action a million times, down here and then up. And the week after next week, they hit their monthly target. I think one major issue that many of you guys are having in your trading is you're doing everything inside of all this nonsense. And you don't have any of this planned. And you're just inside all these tiny little candles. You're stuck inside the noise. And I'll say, well, where are we going to be in 3 weeks? And you're like, 3 weeks? I don't even know where we're going to be in 3 hours. I can't even think 3 days. Well, we just discovered your problem. You don't know what's going to happen in 3 days, yet alone 3 weeks. Right? And you might actually be struggling with what you should be doing the next 3 hours. Like, you log into your chart and you're like, I wonder what I'm going to do for the next 3 hours. That's your problem. That's it. That's what leads to mediocrity, or even worse, losses. Okay? I hope you agree with me. So I want to go back to the Kiwi because I did the relative strength exercise and right? And notice that it's even weaker than Aussie at the moment, which is pretty amazing. Yeah, so right now, most of it, I'm just looking at the setups here. I have about 300 pips on an Aussie yen, 100 pips on an Aussie yen, 80 pips on an Aussie yen. So what is it? We'll call that 1, 2. Yeah, so it's 500 pips on the Aussie yen. Then I have 300 on Kiwi Swissy and 200 on Kiwi Swissy. So 500 pips there. So just on those, it's going very well. So that's 1,000 pips just in those Kiwi, Swissy, and Aussie yen. 1,000 pips. Cool. All right. So here we are, Kiwi. So the thing I want to ask myself in this scenario is not like, what is it doing now? How far is it going to go? Do I want to be a bear? Well, let's take a look. Let's take this old support. Okay. Cool. Okay. On top of that, this is a monthly sell. So now I probably want to set up next week's weekly sell. And this is my next week's weekly sell zone. It's a little tough, though, if we bounce off support and do this. I don't like that because it's much more like this. So that is tricky. That's tricky. The interesting thing then is I'm going to throw a little finesse in here. I think what it'll probably do is break down fast, hit next week's target too early. We call this out of position. Okay. You'll have to take the swing trading course included inside the swing trading group to understand what that is. That predicts the counter trend. So that would take us back into here. So in this case, what it looks like is down the rest of today, down on Monday, and then by Tuesday or Wednesday on our way back, and by Wednesday or Thursday, probably back at 70.50. Now, what I would rather have happen is kickoff of here. So really, I'm setting up now by around Wednesday or Thursday of next week, I will probably look to resell Kiwi yen somewhere between 70 and 70.50. Hopefully 70, because then it just takes off. I'm not talking about today. I'm not talking about Monday. I'm not even talking about Tuesday. I'm already setting up plans that are most likely going to happen on Wednesday. Now, along this, I can have day trades down, 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 out, up, up, sell. Down, down, down. Right? So down today, down Monday, up Tuesday, right? And then around Wednesday, probably back sell. So I could just do sell, stay short today, short Monday, don't sell Tuesday, sell again Wednesday, Thursday, Friday, Monday. Because that would create the simple price action of down, 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 up, up, sell, down, 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 down. Okay? Otherwise known as down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 right? Up, sell, down, 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 so on and so forth. 8, yes, it only meets Thursdays. Okay, to set up trades that you'll be on by Monday at the latest, usually. Okay? But I record it and put everything up there. Now, when I do the day trading course in about a week, it will be Monday, Tuesday, Wednesday are all dedicated to the day trading course, where I will teach you how to day trade, which means we're going to go after 100 pips, and it'll take you about an hour per day to set up. Okay. So we'll do that Monday, Tuesday, Wednesday, and then on Thursday we'll do the swing trade, and we're looking for 150 to 300, okay? Because we're on different time frames for day trading, right? Like a day trade is you're going to be in it for 24 hours or less. A swing trade, you're in it probably 3-4 days. Okay, like a monthly swing, you're probably in 3, 4, 5 weeks. Okay. And AMFX wanted to know if anyone was successful. And then he was mad that I didn't sell them. It is factual to state that one of our clients on the first day of September was already up like 8,000 pips. But that's not normal. That's not average. You shouldn't expect that. All that kind of stuff. But, you know, it seems weird to have to like sell you. You either want to learn how to trade properly or you don't. There's no sell. Well, I don't trade Dixie per se. I have nothing against Dixie. But I trade it like this. Okay, dollar stronger than pound, but look at this. It should stop, by the way. So if you're not familiar with pivot points, okay, a week ago we were here, and the target was here. Well, there were two targets. One was this zone here, and the other one was this zone here, okay? So it's no wonder that price stopped, okay? So like most people trade like this or some form of this. And they don't know that it's over. How terrible would that be? Isn't that interesting? Raj, go to the website, swing.fxbootcamp.com. It will take you about 6 seconds. Scroll to the bottom. It only moves this much. There's not a lot of words. You want to join the swing trading group? I'll teach you. Join, right? There's no sales pitch. Just if you want to join the group, join the group. There it is. It'll tell you the price right there. So type that in and go there. Okay, there you go. Okay, but anyways, so imagine you didn't know it was the end. But let me explain or show how important this is. Okay, watch this. You ready? Boom. Green means up, doesn't it? Somebody didn't know or doesn't know, and that would be horrible, wouldn't it? To not know. Look at the accuracy, guys. These are 4-hour candles. Touched, 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 just for a whole day. Can't even go 1 pip below that number. Oh, thank you, moderator, for posting the link. I appreciate that. Someone should be able to type it in for themselves, all right? Well, Hope says the up, and then sell, but I am worried when you get to this that it's the end. So I get very nervous, especially early in the month, because let's say it was the end of the month. I'm not even worried about this month's pivots anymore. I'm already on next month. So if it was the end of February, I'm like, oh, I'm overriding these February pivots I'm already on March, right? No, it's not even the middle of February. So I'm not thinking this. Okay? This is an OOP CT scenario. And I'm worried that it's going to do more like this. Okay? So I'm actually going to treat this one as range bound until it proves otherwise. Remember, I'm not saying it's one thing or another. It just has to prove to me that it's trending down. Now right? It's okay to be a bear on the pound and all that kind of stuff. I'm just saying it's not quite downtrend, so you got to be careful. Now it might become downtrend, but pivot points would argue that you're going to need more evidence. Okay, pivot points are not going to help you. Okay, so let's take a look at the rest of the world versus dollar. Okay, New Zealand dollar. Nice, right? Cool. When's it going to come to an end? Good question. Okay, once again, this is out of position. And we are expected to hit this probably in the next few days. We'll hit 63 and it should stop. Okay. So it could probably do this and then this. That's what I'd be worried about. Okay. But right now, dollar strong. Sweet. Versus Kiwi. Very nice. But we already know Kiwi is the weakest on the planet. So that's why it's out there. Let's take a look at Aussie, probably the second weakest currency. Very, very similar. Now, this is where bulls buy. It's very definitional. It's in my book that I wrote 13 years ago. A bull would buy there. So that's where bulls buy. That's just obvious. And a bear would sell here. But the interesting thing is we have a mixture of time frames. So this is a weekly sell zone. And the target for those guys, those fellas, they're targeting 66. So their trade plan was sell at 67.5, going for 66. So the relative value of this is 150 pips. Okay. Now, you'll need to decide as the next trader, like doing something now is really late. I mean, you can still do it, but what's in it for you? 50 pips? Like, whatever. I would think more about the next trade, and that would be, remember me doing this over and over and over again? Find the old support, line it up over here, and it should or could or most likely will be resistance in the future, okay? And I'd set up the next move. I wouldn't worry so much now, like now to get in the game, because you're thinking, well, what if it falls here? I can get all these pips. It's not a lot of pips, bro. Okay, you should be setting up the bigger trades. You're worth more. Oh, Meta's going to help Jose? Right on. Thank you, Meta. I don't know what the issue is. I don't speak Spanish, but right on. Meta's good people. Okay, now here's the flip side. Dollar versus CAD. Okay. So you can see I have some sort of plan here. Now you could also see it looks like it didn't work out. I'm not sure because these kind of move over time. I'm not sure if it was like this. Honestly, I don't remember. But the point that I'd like to make is you can clearly see I'm planning my trades. And that's all I'm trying to get you to do. Plan your trades in advance. Have plans. Have strategies. Hey, Barry. What's going on, buddy? Yes, well, that's what it's for, right? Max says, do you use the scan currency to determine weakness? Yes, so it's called relative strength. So let's do it this way. It's called relative strength. So let's put everybody on a 4-hour, for example, or everyone on a 1-hour, or whatever you want. Just make sure they're the same time frame. Okay? This indicates in the recent past, it doesn't indicate the future. In the recent past, the dollar has been stronger than the pound. The dollar's been stronger than the Kiwi. The dollar's been stronger than the Aussie. And it's been stronger than the CAD. So generally speaking, up to now, dollar's been stronger. But you could also eyeball it and see that Kiwi is a lot weaker than pound. Why? It's moved a lot more. Okay, now I have a little less time on here. Oops. Oops, come on now. Okay, so like over this period of time, this has been more sideways, and this has been more down over the course of the same amount of time, right? This I probably need to click in, make it about the same. Okay, so you can see over this period, Kiwi's been more weak than pound. Because we have one common, well, they're not all denominators, but relative to the dollar, so the dollar's constant amongst all of these. That, if you pay attention to that, you will find which one is weaker. So you could say like Aussie's quite weak, Kiwi's quite weak, CAD is quite weak, and pound is not. Okay? So that's so the question originally, Max, was do I trade Dixie? This is my form of Dixie. I've made an indice, right? Similar to this. Aussie's weak. Pound, not so much. Kiwi is weak. CAD is weak. Okay. Yen is strong. Dollar is strong. Swissy strong. But I'm buying yen and I'm buying Swissy. You guys see that? I'm selling Kiwi and I'm selling Aussie. And the combination of, what am I short? Kiwi, Swiss franc, and Aussie yen. Just those two pairs, I am currently up 1,000 pips. Just on those two pairs. Aussie yen, 300 pips. Aussie yen, 90 pips. Aussie yen, 75 pips, right? Kiwi Swiss franc, almost 300 pips. Kiwi Swiss franc, right? 220, that's 4 plus that's 5, right? So 1,000 pips just off of these indices, but I'm not actually using the indices, of course. I use the scans. I just do it myself. I look at it very quickly because I don't really trust the indicators. I just don't. So I'd just rather look at the dollar versus everything and say, okay, if I'm day trading, I probably want to be a buyer of the dollar. Which one's weak? Oh, all the commodity currencies done. And I'm onto my trade. Okay. It takes me less than a second. It takes me a couple of seconds. Okay. So dollar strong right now. So that's actually going to hurt me in my peso trade. So let's take a look. Ooh, nasty. Too bad. Too bad. So I was short here. I was doing well all week, but shame on me. Okay, shame on me. Check this out. Obvious first entry, obvious second entry. So I'm on the second entry, right? But this is the obvious target. And I think we talked about it, but I didn't do anything about it. So shame on me. I should have taken profit down here. I do not trade funding currencies against each other. So I do not trade USD Swiss franc. Okay? I don't trade Swiss franc versus yen. Okay? And I don't trade USD versus yen, although I'm more open to that than any of the others. Also, when it comes to crosses, you have to understand, like, I'm a macro player. So I like Aussie dollar, I like Aussie Swissy, I like Aussie yen, I like Kiwi versus dollar, Kiwi versus Swissy, Kiwi versus yen. But I don't trade Aussie Kiwi. Because that's not a macro play, that's a relative strength play. That has nothing to do with global trends. This has to do with who's strong today, and which will change probably next week, right? Like, that's a different. I don't trade euro pound. I'm not saying you can't. What I'm saying is I'm a macro trend trader, and trading these crosses, right? Like, another one I see a lot is pound Kiwi. Okay, based on relative strength, that very often gives you some good trades. It's just not a macro setup. It's a relative strength setup. So you can do it. I prefer not to, because again, I'm making my decisions based on forces I believe that will move the market for long periods of time. And a relative strength exercise generally, but of course not always, but generally can be a lot shorter lived. But you know, you might just not like the Great British Pound because of Brexit, okay? But I couldn't, then why would you want NZD? So I don't know, I find it difficult. But yeah, now I guess the way you would do it is you'd find something that happens to have a macro force, let's say up on this one and down on this one. And it could happen that pound went from way oversold because of Brexit to gunning it back, and Kiwi's just being affected by China. So you're like, well, China is offline and pound was oversold and racing back, and it's not as bad as everyone thought. And so for a while, pound might be really strong, and for a very long time, Kiwi is likely to remain poor. And so maybe the relative strength ends up looking like a macro play, but I think more often than not, it's not. Okay. So I'm down to like 14 minutes, guys. What's up? How can I help? Talk to me, Goose. US Noki. All right. First of all, if you're going to do that, you need to be a bull on oil. So you told me that you believe crude is going to go up off of 50. Let's check that. So some of you guys are shorting Euro Turkish lira, which I have no problem about, but I think it's going up in the moment. So anyway, so I'm just like, whoever's going to go short USD Noki, okay, is saying this is going to go up. So that's cool. Make sure Brent is going to go up or WTI stays above 50. I think what will happen is Brent is going to test 50 and WTI won't. But anyways, you're saying that these are going to stabilize. Okay. So if they stabilize, you want to then set up a USD Noki. I don't even have that here, but let's do it anyways. You know what? Let me do it here. So I go here and let's do the Noki. Euro Noki? No. Pound Noki. Like, why wouldn't you do Euro Noki? See, I wouldn't trade it against the pound dollar. That seems risky to me. And I'm anti-Euro anyway. So, yeah, you know what? I'm just going to override your thought, and I'm going to go with my thought. Let's look at Euro. Okay. And so you want to sell this. Well, okay, fine. So, again, you believe oil is going to stabilize and go up, which means this is going to stabilize and go down. We breached outside the normal sell zone, but it's acceptable still. You know, there might have been an Arctic turtle, as I call it. So now your next play is up somewhere around 1022. You're going to look for a rejection, aka it will act as resistance. Okay? If you get that, you're going to take your first shot. Okay? Okay? And that should get you down to here. And then the week after, you're going to set up something like this. Okay? Off of this roll reversal like I showed you 19 times today. Okay? Now, if you are right and you have the guts and discipline to stay short, your target is going to be 980. Yeah, I know, huh? Yeah, oh, for sure. Hundo P. George, no, I screwed that one up. So, George, I got my stop at break even. I don't know, maybe I got lucky. I screwed up. I should have taken profit 2 days ago. My bad. Okay. So, there's to the Noki people. Okay. That's how you would do it. But you need oil up as this happens. Okay. So if oil goes up, Europe has to pay more for it. Russians get rich, the Norwegians get rich, the Canadians get rich, the Japanese suffer, Europeans suffer. Whiskey recommendation. So I got the George Dickel bottled in bond whiskey of the year. Why do most people lose money in the market? They're lazy and undisciplined. Well, and the other thing, George asked, what am I going to do now with that peso? My rules of engagement won't allow me to take a small profit because it's going to screw up all my averages to have a small profit amongst all my other profits, so my average profit falls. I'm very unwilling to do that. Okay, and it wouldn't help anything. Like, it's just there's no meat left on the bone, so I don't even really care. And if it knocks me out at -3, again, it's not really a lot of money. I mean, it means nothing. But now, when I have lots of -3 losses, it makes my average loss very small. So I admit I screwed that one up, but I'm not going to take a small win. The money doesn't help, and then the stats get screwed up, so that doesn't help. So I don't know. I screwed up. What can I say? Barry, I've done it, but we can take a quick look for you, Barry. We can go back, get her done. I don't mind. We have a few minutes left. Okay. You ready, Barry? My next projected buy zone is right in there. 94.5, let's say. Okay. Bonnie wants to know, with 1,000 pounds, what size lot size should you have? As small as you could possibly get it. Okay, so if you want to turn that into lots of money, okay, so you have 1,000 now. You can't change that. Okay, you have 1,000 times your monthly rate of return, okay, over time. So if you're doing 6% monthly, at the end of 1 year, you'll have 2,000. Okay? At the end of 2 years, you'll have 4,000. 1 more year, you'll have 8. You see? But all the while, you're constantly growing at 6%. Okay? It's what you start with times the monthly growth rate and for how long. Okay? So you can play around with this and say you only have $1,000, but in 20 years you'll be a millionaire. And what most people do is they just gamble the $1,000 and they're broke in 6 months. It's mathematically possible to be a millionaire, but people don't do it. But it's mathematically possible to be a millionaire in many different ways, and people don't do it. Well, Ed, there's just, what am I going to do? Like, it's not enough. I've just moved on. To me, it's a screw up. I mismanaged the trade. So I'm going to take a -3, which is nothing. But I'm going to document it as a trade plan I failed at. Okay? That's all, Ed. I'm not trying to make a big statement out of it. I screwed it up. So it's a screwed up trade. In this case, it's right, because really -3, it's break even is all it is. I screwed it up. I mismanaged it. I should have taken profit. I don't know why. I don't know what's gone, coaching or whatever. I missed it. Screwed it up. It was a bad trade. Okay. But like, I didn't mean to make a big thing out of it, right? So don't overanalyze it, right? All right, so that's the end of the webinar. 3 hours. Thank you for being here. We started at 7:30, then we went to 8:30, then we went to 9:30, and now it is 10:30. I want you to have a wonderful weekend. If you want to spend an hour or so per day, hour and a half with me every day, visit tradersway.com, open up a demo account. In your demo account, there's a button that says live webinars. Every day, 8 a.m. New York time. About an hour and a half. Welcome to the team. Welcome to the Traders Way family. Also, if you'd like to join my swing trading group, get the swing trading course, get weekly help, live help with your swing trading, and you want the day trading course added to that for free in 1 week's time, then swing.fxbootcamp.com. You'll become a day trader and a swing trader. And that's especially important for people that don't have a lot of time and cannot sit in front of their charts for 6 or 7 hours a day. Then you need to join swing.fxbootcamp right now. Thank you to FX Street for hosting me for the 166th month in a row for this webinar. But I worked with them for probably a year or so in front of that. So I'm getting close to 15 years of working with FX Street. So thank you. And also a big round of applause for the world's greatest moderator, who moderates like no moderators ever moderated. Thank you very much for the effort and time. And thank you to everybody here for your patience and your focus and for treating me with dignity and respect and asking good questions and, you know, cool. So, namaste. You'll get through it, guys. You'll figure this out. And the effort you put into Forex trading is worth 1,000,000 to 1. But it won't be easy. And I can't wait for us to get together and share war stories. And I'm sure you'll tell me how much all of this has changed your life in a positive way. Have a wonderful weekend.